Hey, what's up everyone? Welcome back. In today's video, we're going to take a look at quant. So if quant's going to break the $111 or is it going to come down closer to that $97 support zone? Let's take a look. So right now, quant is trading at $104. We've seen week after week, the price has been consolidating since December, coming up to the immediate resistance here of 124 and then support around that $97. What's really nice here in the weekly time frame we're seeing is the price holding above our moving averages, which is a good sign as well. If we go into the monthly time frame, we are kind of holding it very, very closely here with our moving averages. We are using it as an area of support, broken in November for this area of resistance. So time will tell if we're able to hold on to this area of support. Ideally, if we see a break above our 38% of our Fibonacci, it is still going to target us in a bull run. And essentially, that's the middle of our consolidation zone. We do see some neutral momentum in the RSI at 50%. Ideally, we do want to push it around 60, opening up the candlestick closer to that 38, 111. And then if we take a look at our MACD indicator, we kind of see the momentum slowing down. But let's kind of deep dive closer into the daily time frame. So again, we're seeing a little bit more refinedness of this consolidation zone. We see a lot of selling pressure as the price comes up to that 124 and then the price coming downwards. We do see a potential candlestick at the very bottom here. This is known as a reversal candlestick in a downwards trend. However, just be very cautious. It doesn't really do much in a consolidation zone where price moves sideways. It's more effective when the price isn't in downwards trends whenever we're looking at bullish reversal candlesticks or bearish reversal candlesticks. A confirmation of a pullback in terms of this reversal candlestick is essentially the next daily candle closes fairly strong, ideally closes 50% of this bearish candlestick coming up $108. So if this daily candlestick can close around $108 in conviction of higher buying pressure, then price may want to come up and retest this resistance line found around the 20 and the 50. We can also see the 50 and the 20 moving average kind of moving horizontally here, playing the act and the part of this consolidation zone. So if we do see a cross below the 20 moving average, crosses below the 50 moving average, most likely the price is going to retest that $97 and then we'll see from there. Let's take a look quickly on the 4-hour time frame here for you. Again, a little bit more easier to see in terms of this consolidation zone as we see the price itself kind of reacting to the moving averages here. We see closer, smaller bodies coming up to this peak point. And whenever you see smaller bodies followed by a red candlestick, essentially the price is going to reverse from here. So high extension wicks at the very top shows the surge of long traders, long positions in this segment here that take profit at the very top. That's why if you dive closer into the 1 hour, 2 hours, 30 minutes after this 4 hour, you're able to see a lot of sharp turns at this peak point. And that's what results in this higher wick. Normally a higher wick extension shows that the market is overly exhausted by the candlestick body at the very bottom. And of course, with a followed red candle after the 4-hour candlestick itself, the price is going to retrace. Same kind of thing found at the very bottom if we're able to see that exhausted wick, that sharp buying pressure followed by a green candlestick, the price itself is more likely to rebound from there. So followed from here, we do see smaller candle bodies, which shows some indecision in the marketplace. We may see some found support where the price is currently at, ideally maybe at the bottom of these candlestick wicks at $104. So the price itself may dip a little bit further down. We do see some supported areas from here. In this 4-hour time frame, I'm just going to pull out our fixed volume profile. This will show us how much volume was found in this dollar amount, which was more popular in terms of the dollars and where we see the price. So whenever a price moves away from different clusters, that's essentially where a lot of volume at the dollar amount is. It's most likely going to find the next cluster. Again, we see on the left-hand side here, we see price points around $104 to the outskirts of here, $103. We've already seen an extension of this candlestick wick. So again, we may see a rebound followed by a green candle in the next 4-hour segment. If we do, price may want to come back up here, roughly around 108, which is a known area of resistance, and then take it from there. If the price, for whatever reason, the next candlestick is a red candlestick and it comes even further, here's our next area of supply and demand from our previous volume of our dollar amounts, roughly around $101 to $102. So that's essentially those clusters. And again, this kind of validates the previous outskirts of our support found on these dates here in January 13th, January 11th, January 10th. So itself, if the price does not again hold and rebound in the next 4 to 12 hours in this area, then price is most likely going to come down to 101 and then kind of play it from there. But let me know what you guys think down below here for quant. If you enjoyed the video, thank you guys so much. Smash that like button, subscribe as well. Also send me a lovely comments because I love seeing your comments in the morning when I'm making my coffee, and it just kind of brightens my day. Starts off such in a good mood. But thank you guys so much for watching, and I'll see you in the next one. Bye.